Hello everyone, welcome to today's panel discussion, COVID-19, a catalyst for digital transformation in the banking and finance industry. I am Aarti from YASH Technologies and I will be the host for today's event. We all know that the recent pandemic has disrupted operations of the banking and financial institutions to a greater extent, and this has led to a significant increase in the digital investments. But what are the right emerging digital technologies that cater to unique client needs? And how will those investments yield expected results and outcomes during the tough times? Today, in this panel discussion, our banking and finance experts answer these intriguing questions and share their experiences and insights on how digital technologies are helping banks and the financial institutions to combat COVID-19. Now, before we move on further, let me take a minute to introduce YASH Technologies. We are a leading IT consulting and services company for large and fast-growing clients worldwide. With 6,000 plus workforce, multiple delivery and sales centers globally, we serve our customers across 6 continents. YASH customer-centric engagement framework integrates strong domain expertise and consulting capabilities to provide digital, application, and infrastructure services. Over the years, we have built a strong partnership with leading technology solution providers like AWS, Microsoft, SAP, and Oracle. We started our journey in the UK in 2005, and being the right size partner of choice, we are successfully delivering a significant number of large and complex transformational projects for some of the Fortune 500 customers in the region. Over a period, we have built strong functional and technical capabilities in verticals such as banking and finance, manufacturing, life sciences, retail, and pharma. We have a mature banking line of business serving some of the prestigious large banks across the UK and the rest of the world. Before we begin today's session, I would like to take you through a few housekeeping activities. The session will be recorded and the link will be shared to all the attendees later this week. You will see a control panel on the right-hand side of your screen. The orange button on the top right-hand side of your screen can be used to collapse and expand the control panel. The staff will manage the Q&A functionality. If you have any questions for our panelists, please enter the same in the questions window on your control panel. Your queries will be answered at the end of the session. All attendee microphone will be muted to prevent any distractions. Your participation is important all through the session. And last, as we all are working from our homes, I request the attendees to kindly excuse for any sort of background disturbances from our side. Now let's take a quick look at our speakers for today. Mr. Sanjay Tinani, Deputy Head of IT, Jordan International Bank. Sanjay has worked across banking, financial, and consulting services for over 20 years, managed teams and projects across the EU region for digital transformation and process improvements. Mrs. Srinivas Tiwari, Vice President, Banking and Financial Sector at YASH Technologies. Srinivas has over 2 decades of experience in Tier 1 banks across the world. He has a balanced view of financial industry from a domain and technology point of view. He is familiar with the inner workings of multiple line of businesses and has an in-depth expertise of technologies used by banks, fintechs, and other financial institutions. He is also has a very passionate views on customer-centric financial services. Our third speaker is Mr. Gautam Gupta, Vice President Digital Service at YASH Technologies. Gautam is associated with YASH for more than 15 years. He has over 28 years of experience in the IT industry. He is primarily responsible for aligning the company's vision with emerging and future technologies which are relevant to customers and the industries. He has led large customer engagements and projects in diverse industry verticals, including banking. Without any further delay, I now request Mr. Gautam Gupta to please take over. Over to you, Gautam.
Thank you so much, Aarti, and very good afternoon to all the audience here today and the panelists as well. So it's a pleasure to be here and talking to you on a topic which is kind of impacting each and everyone, irrespective of where you are and how and which industry you are working with. And the global narrative around COVID-19 is also shifting. Across the world, the businesses, governments, media, and public discourse is gradually refocusing from how to combat the virus and also to resume and rebuild the economies. Organizations across financial services have undoubtedly demonstrated a flexible and resilient response to this crisis. A wave of measures have been implemented by the government, including fiscal stimulus steps, rate decreases, liquidity measures, and relaxations of capital rules. Banks in UK are suffering relief on payments to mortgages and customers. For example, Royal Bank of Scotland, for instance, will allow loan repayments to be deferred for up to a period of 3 months for its customers affected by COVID-19. Other banks such as TSB and Lloyds have also announced similar kind of support. According to the Bank of England, UK banks are better positioned to withstand the headwinds than they were before the global financial crisis in 2008. Therefore, banks will now have to serve as a systematic stabilizer, particularly as a high number of households may be susceptible to the effects of coronavirus measures. Banking sectors has moved swiftly to adopt digital technologies to serve their customers better, and leaders across the banking and financial sectors in UK agreed to enhance their digital capabilities and footprint as a direct response to this crisis. Over about 60% of the leaders agreed that the organization would increase the use of digital technologies such as AI, machine learning tools, and other emerging technologies in the next 12 to 18 months. It is pleasing to see that the majority are looking to utilize these innovative technologies to enhance their customer experience, improve employee productivity, and reduce operational cost. And one of the recent research that was done, it was found that the emerging technologies, if implemented correctly, will help the banks to recover from the pandemic impact and gain resilience and agility as they were before. So to discuss some of those areas, today we have an expert panel from various industries, various banks. We have Mr. Sanjay Tinani and Mr. Srinivas Tiwari with me here, and who would be sharing their perspective as to how they are seeing various banks and industries in the banking and finance coping up with this crisis. So very warm welcome to Mr. Sanjay and Mr. Srinivas. My first question to you, Mr. Sanjay. How do you see Jordan Bank coping up with COVID-19 and post-COVID-19 situation? What kind of changes have you seen at your bank itself?
Hello, Gautam. Thank you very much for getting me to be a part of the conversation. Just to add to how Jordan Bank is coping, we've definitely seen a drastic increase in digital adoption by both the corporate and retail customers in the market sector. So for Jordan International Bank, the COVID-19 situation has shown us a way forward in digital banking for continuity in providing service and solutions to our customers. We have definitely seen a rise in requests from customers and queries for our online banking platform. Being a private bank, we have to continue to provide a personalized service to our customers, which they expect from us, and we're trying to use technology in a way to deliver this better.
Thank you, Sanjay, and definitely other banks also would follow your lead as well. So the next question is for Mr. Srinivas. What is your observation working with various banks globally? How do you see the situation panning out in the next 3 to 4 quarters?
Hello, good afternoon. Uh, Sanjay and Gautam, thank you for having me. First thing I see is a reduction in footfall, in-person interactions from customers at the bank for BAU activities. That is quite evident from this pandemic. What I see currently and increase in digital engagement with prospects and customers, not just for service related activities for their accounts, but for the entire life cycle, right from acquisition, onboarding, servicing, and even retention. Uh, with the less number of staff working in the bank, banks are trying to figure out reduction in cost through automation due to reduced in-person workforce in front and middle office, and adopting to compliant onboarding process for various products.
Okay. So, a follow-up question to Mr. Sanjay. You mentioned technology is helping Jordan Bank to navigate the new normal. Would you be able to share some examples? What kind of technology that you are seeing that is helping your bank?
Yes, definitely. As you probably know, technology has always been the backbone of all the banking sector, be it when you have a walk-in down to a online request. Recently, we've seen an increase in digital customer behavior because of COVID-19 and some of the initiatives that the bank has taken, not only for customers to be served, but also to be for our staff to be able to provide the service, is to enable remote working using Microsoft technologies. There are a lot of digital onboarding for customer communications. Being a private bank, this situation has made us think for our business continuity processes, not just for us, but for all banks. And but also improve, and one of the main things has been to improve remote team working and online collaboration. So the communication which is missing from face to face is replaced, but at the same time, the communication is still used in a better way to serve our customers.
Sure. And I think the very essence of doing banking is changing in the sense the way we used to visualize as a bank, where you can go into a branch and then you can do transactions or whatever. So technology is actually helping to see that change. So follow-up question to Mr. Srinivas. I mean, following back what Mr. Sanjay was saying, in your view, how technology is playing a role with banks in a global scale, just not in UK, but also what you're seeing across different geographies.
Right. So I completely agree with what Sanjay and you are saying. The technology has always been a very big support for the actual functional part of banking across all lines of businesses, not just retail or corporate. From being a backend support for mobile applications or web banking applications that let transactions to happen from the end customer to the bank, and how the banks interact with other banks, technology is moving forward to the foreground of customer engagement in terms of partnership with fintechs and other vendors and other banks. Even from customer side, customers are no longer satisfied with one bank and one product view. They are getting used to a centralized view of their finances and freedom to compare and choose different products suited for their individual financial strengths, independent of a single bank. Open banking regulation is one such initiative, which is helping in leveling the playing field for various financial institutions to serve the customer better. And this is not just happening in the UK region, it's happening in the Middle East, it's happening in Australia, across all over with different flavors.
Very good insight, Srinivas, and many thanks for that. So, following up with Sanjay, I mean, there are several digital-only challenger banks in UK. Is Jordan Bank also innovating on the digital channel?
Yes, Jordan International Bank always continues to innovate with our service offerings for our customers. The case of the challenger banks, which are digital only, are accelerating these changes in the sector, which is great news. the benefits of having a business model that is digital to its core is that banks can adapt quickly to constantly evolving customer demands, the changes in technology, and the innovations which come along. Uh, Banks which have a very large legacy system need to adapt, kind of adapt and adjust quickly, or collaborate with tech and fintech companies, or innovate. Otherwise, innovations will always be slower. At Jordan International Bank, we're always on the lookout for the next innovation, which will help serve our customers securely and at the same time provide a better user experience. So this brings along with it the advantages to improve our processes and streamline the service delivery as well. I think the main criteria, along with the challenger bank, remains the security, and I think the whole banking sector is very much aware of security.
Absolutely, absolutely. So a good point was highlighted by Srinivas, and that's the reason this question is for him. On open banking, you mentioned open banking is something that is pretty prevalent in UK and the rest of the world. So do you think COVID-19 will have any impact, positive or negative, on the innovation based on PSD2 and open banking, Srinivas?
Yes. So one thing that I definitely see is it's going to accelerate the timeline of digital adoption. These initiatives related to open banking, at least in the UK regions, are almost like a couple of years old now. And then in Australia, it is just getting started with October 1st as the mandatory date for customer data sharing, and then product reference data. Even in the Middle East, from governments, we have these initiatives of allowing the banks to monetize their APIs that they have implemented for open banking to cover their operational costs. Now that there is some stability in terms of implementation and timeline, most of the banks are now looking at key performance indices for the list of APIs that they have already implemented or they would like to implement. In terms of security, for example, measuring number of auth tokens, number of fraud tokens, transactions that they are able to help with. From a business value perspective, how much cost or revenue per API they are generating and how many payments are being processed. And like Sanjay was rightly mentioning, from a customer experience perspective, the response time, active users, availability, how do you increase the customer satisfaction while serving them. Apart from this, we have these operational aspects of platform in terms of number of transactions, and then developers getting onboarded, total number of API, the availability of the API, and so on. Partnering with fintechs using open banking is no longer limited to having an edge over the competition. It is becoming a mandatory prerequisite for survival, at least in some regions, either from the account information service or payment initiation service perspective. It is really a critical time for all the financial institutions to look at the metrics that are involved with open banking.
Absolutely, Srinivas, and totally agree with you on the fintech part, especially, a lot of fintechs will start playing a major role in the open banking space, not only providing services to various banks, but also integrating multiple different banks where we can actually share different products and services when you can cross-sell and upsell. So that's the question I have for Sanjay. I mean, do you see these fintechs, are they going to be your competition, or are you going to treat them as partners?
I think in the UK, UK is one of the leading places in the world to start and grow a fintech, and I think the numbers show it as well. We in the banking sector, I think from what my perspective is, we see them as a partner leading the path for digital solutions, and they make technology work innovatively for the banking sector. Now, the fintechs, I think they should be named the tech fins because technology is leading the change into the finance sector. So I think that definitely should be renamed. This is my suggestion. And they're definitely leading the change for the financial services sector. Of course, not all fintechs are successfully to perform during these difficult times, but this certainly do have an edge due to their inherent agile nature, being agile and technology driven down to the core itself.
Sure, and that's absolutely right. I mean, UK is the birthplace where a lot of fintech companies, get born and then are brought up. So, and then they are the ones who lead the world in various products and services. So I know, Srinivas, this next question is for you. I know Yash also provides a lot of services in the banking space, a lot of customers globally. Uh, what is the kind of innovation that you bring to the table, in this current scenario, and why would the banks would look for you as a partner or the innovation partner?
Right. What I would suggest before talking about YASH for any bank or financial institutions who are reviewing their priorities in this pandemic period is to discuss and engage with a partner who has the right mix of domain expertise and technical capability. Right-sized partner with expertise and intent to help you innovate right from the ideation stage to all the way to post-go live monitoring and maintenance phases. At YESH, we have a tradition of building long-lasting relationships with customers and not limited to a transactional deliverable model. That's why we have highly customizable engagement models, right from friendly discussions on business or technical problems in financial industry to actually help you come up with RFPs for those specific problems, or even respond to the request for propositions for existing problems that you have for help with strategies to detailed phase-wise execution. We have an end-to-end customizable model of engagement for all financial problems, including technical ones.
Yeah, and I'm sure a lot of prospects who probably are listening to this webinar probably would take advantage of the services that you bring to the table. So thank you so much for elaborating on that. So next question, Sanjay. I mean, has COVID-19 changed the technology roadmap for Jordan Bank in your case?
I think I would definitely agree it has, but if you look at a broader picture to start with, it has made the sector consider how do we continue to serve our customers in these conditions. As we've mentioned during the whole discussion, there are not many customers coming into the bank, but banking still continues and transactions are being done online. So at Jordan International Bank, we have adapted our technology roadmap to accelerate these objectives and continue to review as the market conditions change. The whole banking sector will have to be agile in the true sense, without compromising the core offerings in a secure and stable environment. This means that with the right strategy, we all have a unique opportunity to succeed in the long term, looking at the fintechs. And pursuing advanced technology and digital ecosystems will be the key to the success and redefining the values which we serve to our customers in a very shifting market.
Yeah, and absolutely. So adopting of newer technologies, especially the cloud-based services, the AI MLs of the world, those are the way to go forward. So definitely. So Srinivas, what is your advice to banks? Has it changed due to COVID-19 in terms of adopting newer technologies?
COVID-19 is a black swan event, unlike anything we have ever witnessed in our lifetimes. It has altered the operational models of almost all well-established industries, from movies to theaters to airlines to hotel, from auto industry to energy. Priorities from last year have to be reviewed to stay relevant. Focusing on customer engagement through digital channels and reduction of costs through automation, leveraging partners, especially in financial industry, to build on the strengths to increase the reach of customers, and then rapid go-to-market with phased minimum viable products is the way to go forward. So pretty much the advice has always been there, but it has put an accelerated timeline on the list of things to review and the approach to take.
Absolutely. And thank you so much, Srinivas. So to summarize our conversation today, I think and believe the following characteristics will adaptly define the future banks in the new normals. Banks that are more digital, uh, is more data driven, is more on the cloud, has a variable cost structure for its operation, adopt more strongly with more integrated digital sales and services capabilities, a bank that is highly automated and leverages AI, uh, has a modernized IT shop, and that isn't buried under the legacy IT debt that most of the banks are in the past. A bank that has thought through the implications of having a big captive centers that they operate with and work with. So these are some of the characteristics, I think, what we understood from our today's discussion. Also, I would like to add that the advancements in the digital technology are making the crisis more bearable and are enabling businesses to keep working with access to key services in the areas of communication, payments, credit, collaborations, etc. And still enabling the social distancing and helping to fight COVID-19. And we hope and expect the digital technology will boost uh, after this crisis is over. So in the coming months, UK banks will play a pivotal role in modernizing the economic damage caused by this crisis. While it is encouraging to see early response measures deployed at pace, COVID-19 also presents an opportunity for the banks to accelerate the journey towards the new normal. And that is what we understood from both Sanjay and Srinivas. A big thank you for both of you, gentlemen. It was a pleasure talking to you on today's session. And with this, I would like to conclude the session. And if you would like to know more about us, and you can visit our website as www.yash.com or write to us at info@yash.com. With that, I'll open the floor for questions and see if we have any questions from the audience.
Thank you so much, Gautam, Sanjay, and Srinivas. So I request all the attendees to kindly, if you have any questions for our panelists, please enter the same in the questions window on your control panel, and we will take up those questions shortly. So meanwhile, there are a couple of questions that we have already received. So Sanjay, here is the question for you. Uh, how are the regulators helping banks to deal with the pandemic?
Okay, banks always need to be working inside the parameters which have been laid down by the regulators. So quite early on itself, the regulators published specific guidelines for the banks to be working with in these conditions, these difficult conditions, I would add. With staff working remotely, security, of course, is paramount. And with these guidelines, it has helped us to remain compliant and maintain business continuity, which has been the biggest point in there.
Okay. Srinivas, here is a question for you. What is the way forward in the post-open banking ecosystem?
Right. So I'll just take a quick minute for the precursor of open banking. Around 2009, we had this Payment Services Directive, which is more like understanding of who is a payment service provider, how can we make the charges transparent so that it can benefit the end customer. So what started as version 1 in 2009 grew to PSD2 around 2016, where apart from the payment transaction info, even account information services, so basic information like balance and other vital data was mandated to be shared. And then offshoot of that PSD2 with open banking having regulations with respect to common API and third-party providers, also to be used for price comparison for products irrespective of the bank. And then several use cases came out of that. Open banking implementation from an API perspective is a carefully balanced uh, objectives from various players. So third-party providers have their own goal, banks have their own goal, and regulators have their own goal. Ensuring a secure and fraud-free exchange of customer data, sometimes authorization at a very high level and sometimes even at a transaction level. How does data get exchanged, either as part of the account or as part of the payments? So while several products are being focused in the areas of personal finance management, payments, wallets, and nowadays we have of late from last about 8 to 12 years crypto and remittances, and then we have other lines of businesses with capital markets, and obviously we have the regulatory and compliance. Um, Open banking implementation entities are continuously working on improving and enhancing the specifications. So what started as a simple payment related set of rules is growing much more. So recently we have proposition P2, P8, P9, P22, which is basically two-way notification of revocation. So if a customer wants to revoke the authorization given for sharing some set of data, uh, that notification has to go to all the providers as well, so that they can act in real time. And then we have focus on this strong customer authentication, where, for example, in UK, if you are spending using a card, if the mode of, let's say, for tap to pay using near field communication, so anything less than 20 pounds, you don't require that additional level of security, which generally in financial industry you have what you have, what you are, and what you possess. How many transactions can be done without actually having additional layer of security? How many times the transactions can be done? And the status of the payments also having more meaningful status sent back to the PISP, the payment initiation service provider, and so on. On top of all of these new specifications, we also have all the financial institutions closely looking at all the key performance indices that will help them grow, either in terms of business or sales, or in terms of compliance from regulatory aspects and so on.
Thank you so much, Srinivas. That was an insightful answer. Uh, so Sanjay, here is the second question for you. What's your opinion on how automation is changing the banking industry and how relevant it is in the post-COVID world?
Thank you. Banks are rediscovering the rapid in RPA. So RPA is not just about process automation, but the quick implementation time, which makes it one of the most important tools for these unexpected conditions like we have right now. So automation is what a lot of banking industry is looking into, but not only the banking, but I think most of the sectors are looking into it. Like we have discussed about installment postponement. No bank had that as an IT initiative or a process initiative on their roadmap. But RPA can allow banks to react to these quickly. RPA is not just a good tool in normal times, but specifically in these uncertain times where there is unexpected change in volumes, and it's a must-have tool. I strongly recommend that every bank, which I meet or I'm in touch with, they should build a small tactical RPA team in-house. If they don't have the capability to do that, partner up with an IT services company like YASH, who have a big department in there itself.
Thank you, Sanjay. Srinivas, here is the second question. How about digital customer onboarding? How can digital customer onboarding in banks increase sales and build loyalty?
So at one end of the spectrum, we have these digital-only banks, and then there are these banks which are coming up as a differentiator option for opening an account or onboarding a customer for a certain set of products. What I personally think is this is a win-win solution both for banks as well as customers, because from a bank's perspective, um, having onboarding done through digital channels and through digital tools uh, works very well in the favor of bank, because there is reduced workforce that's already because of the pandemic. And then by introducing this digital onboarding, you can have more accurate processing of data for the onboarding process, as intelligent software handles the OCR, uses government issued digital IDs, does background checks for the certain individuals opening the account, uses the digital signatures for binding the contracts, and then seamless integration with their core banking with respect to account creation or add-ons, and then integration with vendors for dispatch of cards or checks, and so on. From a customer's perspective, they are no longer limited to physically visit a bank and provide all the necessary documentations for the account they are opening. This digital onboarding is secure, it is regulatory compliant, and convenient, because a customer or a prospect can do this anytime, anywhere, with very minimal input, because with all these wonderful tools, all the inputs that come from documents can be pre-populated, so there is less chance of an error. So I think it is a way to go forward, not just for a certain set of products, but across all the products for financial institutions.
Thank you, Srinivas. So, I guess I have covered all the questions that we have received. And so, speakers, with your permission, I would like to close the session. Before that, if any of you have any final word to say.
This was a great, insightful session that we all had, and we thoroughly enjoyed having the company of elite panelists of Sanjay Tinani and Srinivas Tiwari. So a big thank you to both of them for spending their views and time with us today. And we look forward for more meaningful sessions going forward. So thank you all, and hope you enjoyed the session. Thank you.
Thank you, Gautam. Thank you, all the speakers, for such an informative session. I would also like to thank all our attendees for taking out and participating in this webinar. Speakers, with your permission, I am closing the session. Thank you, everyone. Have a nice day ahead. Thank you.
Thank you.